for us to go ahead and just roll up our sleeves because we're about to get down and dirty as we talk about mining Unearthed, as we navigate the ore of innovation. We've got great companies and great executives to go ahead and have some conversations about lithium, about gold, energy, and all different types of topics. But first, we're going to go ahead and start out with my man, Miles Rideout, who is a vice president of exploration from Argentina Lithium and Energy Corp. The ticker on the OTCQX is LILIF. Let's go ahead and welcome Miles. Good morning.
Hello, Zunaid. Thank you for the invitation.
Absolutely. Look, I told you this on our prep call, but I have to tell you this in front of everybody. I absolutely love your last name. I think it's really cool. I'm jealous. I might have to change it after we get done here. But no, I really do appreciate you joining me. There's so much that's been happening in Argentina. Not just the past couple of years with the World Cup, but also with the elections. And I promise we'll get to that. But before we do, just give me like a brief overview of what is it that your company does.
We are an exploration company. We're based in Vancouver. We're on also on the Toronto Venture Exchange. And we're focused on exploring and then developing lithium brine deposits in Northwest Argentina. It's a positive investment district and very pro mining. Both provinces where we're active have active mines and active lithium projects.
Now, we teased about the Argentina side of things. So taking everything that you just said, let's talk about the newly elected officials down there, right? We've seen how hyped the market was and how they responded to the elections that are happening. I mean, I've even seen on the timeline of Twitter or X about how the president likes to fly commercial and not private. But all that aside, though, the newly elected officials, how is that going to impact your sector? And more importantly, are there any catalysts that you can see coming on behalf of that?
President Javier Milei, who's the key person in this discussion, he's a libertarian and an economist. And I think he has a very good grasp of the issues in Argentina. The direction of his reforms are to decrease government spending and to increase private sector employment. And the key hurdles here would be getting a handle on the current inflation that is ongoing in Argentina, and to increase the amenability of commerce, and particularly international commerce in Argentina. Historically, Argentina has been a very inward-looking country, and typically with significant restraints on international commerce. So there will be a transition period. It's difficult to say what that might be, 6 months, a year, something like that. And then we should see the foreign investment pick up. And I think as well, the Argentine populace will be investing in their country also. That'll be exciting to see. What I don't anticipate is significant changes to the mining regulations. Mining is regulated through the provinces. And where we're active, the provinces are already pro-mining. What they see is, on any producing project, they see a 3% net smelter royalty, and they see the reinvestment in the communities of Argentina's High Plain region, both really important factors for the provinces. So I think that we as miners will get support from all levels, from the federal level and from the provincial level on looking forwards.
There's two things that I want to kind of quickly touch on. Inflation. I've got a business partner in Argentina. We set aside 15 minutes every week so you can complain to me about the inflation. So you're definitely spot on that point as well. And it's always good to have the federal government support. Like we saw EVs here in the States take off because of the tax breaks that a lot of people got when they purchased it. So it's good to hear that the federal government will be in favor of helping in terms of your sector. Inflation aside, let's talk about something else that's increasing, and that's also the demand for lithium in the battery sector, right? So what's the company's, long-term strategy for making sure that you're sustainable and you also have like a competitive supply in terms of lithium for the demand?
Sure. There's actually two factors which we have in mind when we look at the lithium brine market. One is the expanding lithium demand, and I think all lithium investors are well aware of that. The other is the revolutionary extraction technologies, which are becoming more prevalent, and over the next few years will be I think the predominant extraction processes. So I'm talking about direct lithium extraction processing. if you look at the trend in our industry, because of the market demand, exploration companies have tended to focus on larger basins and also basins which might have lower grades. And I think that as these direct lithium extraction technologies become more prevalent, we'll see that trend accelerate. What that means then is we currently have 2 active projects where our exploration is currently focused. These would be mid-grade projects, each located adjacent to a major producer. And for down the road, we've claimed 2 very large basin scale projects in areas where all drilling produces lithium brines, but typically lower grade brines. So our view would be, as we get the 2 main projects moving towards production, these later stage projects would become the focus of our exploration. And what we would hope to achieve there would be to define large tonnage, lower grade resources suitable for direct lithium extraction. And that way, I think we can be expanding through the next 3 years, and then become hopefully a major player in the lithium space through the latter part of this decade.
So we've heard the game plan for the next 2 years for you to be a leader in that space. But let's talk about maybe the fact about how Argentina Lithium and Energy Corp is going to prioritize environmental sustainability, especially with the community engagement in your exploration and development activities, because that's definitely a concern for a lot of people.
Exactly. So all of our activities, we're looking at how we interact with the local communities. And to do that, then we're doing control visits with the local communities to our projects. We update the community leaders on our planning, and we consult them on our planning. And so everything we do is in relation to the communities. We're also hiring staff out of the communities. So technical, logistical, and support staff, and including nurses, are now being hired from these local communities. On the environmental side, again, we review the environmental impact of all of our activity, and we're trying to minimize and preferentially eliminate environmental impact. And that's at exploration stage. As we move forward to production, we will be reviewing our energy requirements and our transport requirements with a view to lessening the load, removing as much transport and energy requirement from the project as possible. And then finally, in terms of water, it's a critical area for our industry. And what we expect, or what we aim for, is once one of our projects goes into production, we would expect to see about 90% recycling of processed water. And so we'll be minimizing our water utilization.
I didn't expect to hear the water part of it. And this is why I'm always fascinated to have these conversations, because there's so many different things that go into making sure that we're not just profitable, but also that you do your ethical duties in terms of the environment as well. So I'm glad you brought up that last piece there. A couple more questions. One of them is going to be, we talked a little bit about the future, but I love to work in goals and milestones. So in that sense, what milestones or upcoming developments can investors and potential investors that are watching at home right now expect from Argentina Lithium and Energy Corp in the near future? Let's talk 2024, 2025 and beyond.
Right. Our current focus is our Rincon West project. That is about 5,000 hectares of basin located adjacent to Rio Tinto Mining's resource in the Rincon Salar. We have 12 exploration holes completed. The drilling's ongoing. Our maiden resource should be ready for publication, I would expect, late summer in North America. So likely that means September of this year. And then, work's going to be ongoing at Rincon West. We have newer properties that we've added. So we'll be drilling on Rincon West, even after that resource announcement, drilling right through the second half of this year and into next year. And we'll be making resource updates as that exploration work continues. Our second core project is the Antofalla North property. We don't have any drilling there yet. We're in permitting. Antofalla North is a 10,000 hectare property located adjacent to Albemarle Corporation. Albemarle has a very large resource, and of course, they're the world's second largest lithium producer. I expect that we'll have our drill permit by about the midpoint of this year. So as we begin drilling on our Antofalla North project, if we can produce similar grades to what Albemarle have produced on their property, well, that would be very exciting for our investors. That would signify that we could produce a very large resource at Antofalla North.
Well, I look forward to having the conversation mid-year whenever you do get that drilling permit, and so we can kind of catch up and see what's ahead as well. I'll turn the floor over to you. I mean, we've talked about the government, we've talked about inflation, we've talked about the future, but were there any other topics or final thoughts that you had before we let you go?
I just would like to provide some perspective for investors. If you're looking at the lithium space, lithium is, it's a growing industry. It's growing from essentially a very small business, say 15 years ago, exponentially into an energy adjacent business. And so I think that, I've always worked in mining, and I'm used to looking at copper and gold and things like that. But I think that we can expect lithium to have the swell of this exponential growth. And I think we also see that the major auto manufacturers will be consolidating their supply chains for supply lines for lithium. And so I think that we'll see a lot of investment from the automotive sector in our business over the next 5 years.
And I know we've got Jay Rice asking the question, is he like the new president? That's the first question I asked Jay Rice. See, you and I are on the same page. We're a fan of what the president is going to do for the lithium sector, it seems. And thank you so much, Miles. I really appreciate you hanging out with me here today.
Thank you very much.
Absolutely. And that is Miles Rideout, Vice President of Exploration for Argentina Lithium and Energy Corp. Ticker on the OTCQX is LILIF. We've got a lot more conversations to go, but I'm going to go ahead and take a break. We've got my man, Piero Cingari, who's going to be coming up to do the next interview. Piero, how'd I do on the pronunciation there? Was I solid with that one? How'd I do? Did I nail it?
Good morning, everyone.
What's going on?
Perfect.
Awesome.
Perfect.
I love it. Well, I'll tell you what, I know you've got a conversation coming up with Taylor. I'm going to hop in the back seat, man. Looking forward to it.
Great. Perfect. Thank you. So good morning, everyone, and welcome once again to this Benzinga webinar. I'm Piero Cingari, stock market reporter here at Benzinga. And it's my absolute pleasure today to introduce Taylor McKenna, CFA analyst covering materials at Kopernik Global Investors. Good morning, Taylor.
Good morning. Thank you for having me again. It's great to be here.
Yeah, welcome back to Benzinga. So, Taylor, over the next 15 minutes, I'd like to discuss about your valuable insights on the mining industry. And let's start, I would say, with the first question. Could you give us a brief outlook for the metal commodities market? And in addition to that, can you tell us more on which metal you are currently more bullish or bearish on, and how this perspective is reflected in your stock picking activity? Thank you.
Sure. Well, thanks for having me. And I think if we take a step back and just look at some of the CapEx that some of these major mining companies are spending currently, they're at historically low levels. So if you adjust for inflation, companies like BHP, Rio, Newmont are spending CapEx dollars at an 80% level that's lower than they were 10 to 15 years ago. So because of that, we see some serious supply constraints moving forward across different metals. And for our portfolio, what's really exciting for us as value investors, we have a big exposure in gold and secondary in copper and platinum group metals. But what's really exciting for us is these valuations that we see with these companies are extreme. So if we go back in time about 10 to 12 years ago, gold, copper are flat to higher. Many of these mining companies are down 50 to 80%. So we're buying gold and copper in the ground at extreme discounts relative to what we think they're worth. Many of these companies, certainly the ones in our portfolio, do quite well at current spot prices. But if prices do increase, which we think is likely due to some of the supply constraints that I just discussed, we have huge optionality to higher prices. And let me just give you one example, if that's okay. If we use Newmont mining as an example, going back to mid 2022, since that time, gold is up about 10%. Newmont's down 60%. You may wonder, well, maybe they've destroyed a lot of value. Actually, we think it's quite the opposite. Last year, they purchased Newcrest Mining. We think that was a steal. So our valuation for Newmont has actually increased while the stock is down 60%. And currently, you can buy gold in the ground at the largest gold producer with the longest mine lives for under $200 an ounce. This is an historical discount, and we're very happy to take advantage of this currently.
That's absolutely incredible, actually. So valuation here are getting, I think, irrationally cheap, right? Are we talking about single-digit PE for the broader industry? Can you tell us more about the industry valuation here? And because I mean, we met 8 months ago, and we were discussing about the same issue. About the cheapness of the industry, but we haven't seen a positive price action thus far. And my question here is that are we at an inflection point now that we prepare for Federal Reserve interest rate cuts down the road this year?
We believe we are, and as fundamental value investors, we don't try to guess what the Fed is going to do or what interest rates are going to do. We buy stocks that we think are undervalued based on fundamentals. And when the tide changes, it's always hard to predict. But we think, again, when you're buying companies like Newmont Mining for under $200 an ounce, when even you add lifting cost and then a margin on top of that, it's still well below the current gold price of $2,000, that eventually investors will wake up to this. I will also point out that these large producers are largely net cash, so there's not a lot of debt in the system. They've cleaned up their balance sheets. So when you look at the whole picture, you can really take solace in the fact that you do quite well if prices stay where they are, but you have huge exposure to the upside should prices increase. When the tide shifts, hard to understand, but that's not something that we do as investors here at Kopernik.
Got it. Let's shift our focus now to China and copper. Now, last year, China had a very sluggish economic growth, ongoing challenges due to the domestic property crisis. What's your outlook there for 2024? And can we anticipate a rally in cyclical commodities such as copper or aluminum as Chinese activity rebounds?
Sure. Yeah. Going to copper first, again, some of the things I said earlier, the scarcity, there are just not new copper projects being developed or found. So there's been about 200 large-scale copper projects found since 1990. Only 10 of those have come since 2010, and actually 0 in the last 3 years. So there are not new copper projects being found. And then on top of that, the time it takes for a mine to be found, for the resources to be found in the ground to get to production, has gone from about 8 years, 20 years ago, to 15 years is now the new average. So over the long term, as some of these mines that are in operation today mature and come offline, there needs to be new supply, and we just don't see that happening with copper. And there are some mining executives out there that think copper has to double in price to incentivize some of these large undeveloped projects to be developed. And that would seem to make some sense to us. And as far as what's going on, as you may be aware, copper is a green metal. It's going to be part of the green revolution. So as the West likely expands their need of copper while China may decelerate, that may work itself out, but the supply constraints moving forward probably outweigh some of the concerns in China.
Nice. Let's talk about AI. So AI has been like the major theme driving the stock market performance over the past year. we have seen some industries such as semiconductors essentially skyrocketing. In your opinion, what materials right now and then which company could emerge as a crucial suppliers for the AI industry? Tell us more about this particular angle.
Sure. I mean, it is quite fascinating. We're at a point in time where I think all of the Magnificent Sevens individually, the market cap is higher than the entire metals and mining industry, all of them individually. So it's at a unique inflection point from that perspective. As far as AI, I mean, AI can really actually help the mining industry. So as you are aware, the mining industry can be very dangerous. There's safety and health concerns, and there's instances where AI has been able to predict some problems before it actually happens within mining. And we would expect that the AI to grow as a solution for the mining industry. As far as metals that could help the AI in software and chips and all of these things that power AI, there are metals and mineral content in them, such as silver and in even some cases platinum group metals. So as those expand and the AI uses of these expand, the amount of metal that goes into AI should increase over time.
Interesting, absolutely. So one more question. Can you tell us, your 3 favorite stock pick in the sector?
Sure. Well, I gave you one Newmont already, and I think if we can expand that even further, Impala Platinum, which is the largest platinum producer in the world, is down materially, as many of the platinum group metals are. We think this is unsustainable. Platinum historically has traded on a 1-to-1 gold ratio to the price of gold. It's currently 50% below the price of gold right now. Impala has the largest reserves in the industry. Their net cash, and we think moving forward, this is a huge opportunity to own the stock. Many people are concerned with the platinum group metals about the deceleration potentially in internal combustion engines. We think that this is possible. We incorporate this into our analysis. For all of mining, we need a big margin of safety. That's certainly the case with Impala for some of these risks. However, there's a huge runway until internal combustion engines move out of the market, as well as hybrid vehicles, which should gain market share going forward, along with EVs, actually use a higher PGM content. So there's opportunities for the PGM metals to grow. And then outside of autos, platinum is very instrumental in hydrogen fuel cells. So if that continues to grow, that's a huge opportunity. And many of these platinum producers, Impala as well, is trading below what it costs to produce. So when this happens, usually the metals react, and perhaps what we've seen the last couple of days are signs of this. All in all, you're buying platinum and palladium and gold in the ground for under $100 an ounce at Impala, which is a huge discount to their historical cost. And we think that it's a huge opportunity from here. On shifting gears a little bit, going to more of a development project, there's a company called Nova Gold, which owns the largest primary gold undeveloped asset in the world, called Donlin. That's in Alaska. This is a project that's fully permitted and is ready to go when the right opportunity arises for the company. Nova Gold owns 50% and Barrick Gold owns the other 50%. So this is a project that likely gets built. It's also very high grade, and the stock is down materially over the last couple of years. This has a very strong management team, a good shareholder base. So we think as gold likely moves higher in the future, being the largest undeveloped gold asset with 40 million ounces, will do quite well.
Thanks, Taylor. Now, before turning to our next discussion, the last question: can we expect the turnaround in earnings to occur starting from Q1 2024, or we need to wait some more quarters here?
It's hard to say, but what we are seeing is certainly, if you look at some of the largest gold producers, the cost pressures have subsided a bit, and actually they're not increasing to the extent that they were previously. So Newmont and Barrick have come out and suggested that their all-in sustaining cost for 2024 should not be materially higher than 2023. Again, that's not something that we like to forecast, but that's what the companies are saying. Once we see higher prices, which we think should happen in the future, then we expect them to earn more than they do now. But to answer your question, we don't expect cost to increase materially, at least this year.
Great. Thank you so much, Taylor. It's been an insightful discussion, and I hope to see you again at our Benzinga event in the future.
Thank you so much for having me.
Thank you so much, Taylor. Now let's move on to our next session. Zunaid, do you want to introduce our next guest?
Absolutely, man. I appreciate you for hanging out with us. Always great insights. Thank you, Taylor, for joining us as well. You have a good day, brother. I know you got a lot to get back to. We're going to keep on moving, though. We've got Dennis Higgs, who is the president of Austin Gold. Ticker on the NYSE is AUST. Dennis, how's it going?
Hi there. I'm going well. Thank you.
We all love to talk about gold. I unfortunately don't have any in my portfolio. So if you find some, I'm going to need you to send it my way. But my understanding is you've got a lot to talk to us about. So go ahead and get your slide up. Let's go ahead and get these conversations started, because who doesn't love to talk about gold? What you got for me?
Okay, sure. Can you, I've got a presentation up. Can you see the presentation first slide?
I sure can.
Excellent. Okay, so Austin Gold Corp. I am president of Austin Gold Corp. We are serial company builders working with serial mine finders. Very briefly, this is our forward-looking statement. It's our disclaimer slide. I will have it on our website. I will be making forward-looking statements. So, Austin Gold Corp. Key takeaways. Austin Gold is one of the very few exploration companies listed on the NYSE. The symbol is AUST. Gold price forecasts range from $2,000 to $35,000 for this decade. We have an experienced team with a proven track record of discovery and advancing projects. Our projects are located in the southwestern United States and Nevada, in elephant country, where the prizes are worth multi-billions of dollars, and the biggest returns can accrue when a discovery is made. So, very briefly, directors and officers, the people are always the foundation of any business. This Austin team has experience in exploration, mine finance, mine development, ESG, and mine operations. We have every segment of the mining industry covered. The Austin Board of Directors have been involved in the building of $3 billion companies, Silver Standard, Predator Resources, and Energy Fuels. And we have two economic geologists who have sitting on an advisory board who have discovered over 1 billion ounces of silver and over 10 million ounces of gold so far in their careers for other companies. So we have the relationships and experience to provide similar billion-dollar success to Austin Gold. So this is what Austin Gold is all about: discovery. Junior resource companies go through exploration, discovery, then feasibility, development, and ultimately production. On this chart, you can clearly see that during the discovery phase, which is circled in this chart, that's where you get some of the greatest rewards accruing to shareholders. Exploration before discovery is where we believe that we have positioned Austin Gold. Very briefly, our projects. We currently have 3 projects, 2 in Nevada and 1 in Southeast Oregon. Previous exploration work on each of these projects over the years by other companies suggests potential for significant discoveries. And at Austin Gold, of course, we bring modern exploration techniques and team experience. So let's look at the one project in Oregon, the Stockade Mountain. It's a classic, large gold and silver bearing project. The conceptual model is the Hishikari mine in Japan. If you want more information on that, you can Google it. It's a very rich gold deposit. The Stockade was previously drilled by 3 major mining companies, but their drilling was shallow with a maximum depth to about 430 feet. This Hishikari type mine deposit is a conceptual model. The deposits tend to get much richer at depth. So we are drilling deeper to find the vein system, the feeder system circled on this map. We're currently drilling at Stockade now. We've completed 2 holes so far. The gold intercepts in the first 2 holes confirm that the mineralizing system at Stockade is robust and contains significant gold values. The strongest intercept so far is 4 feet of over 8 grams gold per ton, and we have not yet hit the feeder system. We're hitting the veinlets at the surface. So we're expecting to get richer as we get deeper. We're currently drilling right now at Stockade. Lone Mountain. Lone Mountain is in the Jarrett Canyon district in Nevada, the north central part of Nevada. It comprises 13 square miles of a highly mineralized window. This area of Nevada is one of the richest gold districts in the world. A window in this area, a window is where erosion has carved a hole in the upper plate and exposed the lower plate. And it is the lower plate carbonate rocks exposed in these windows that host these large Carlin-type gold deposits. So the windows expose where the elephants are hiding. On this map, the lower plate windows are shaded in light blue and the gold deposits are colored in red. The Carlin trend is circled on the lower left part of this map, and you can see the light blue exposed in the Carlin trend. This area, the Carlin trend, so far is host to well over 100 million ounces. About 93 million ounces have been mined so far. Circled on the upper right side is Jarrett Canyon district, which has produced over 9 million ounces. And again, you can see the light blue shaded area, which is the lower plate window. In the central part, on the right side of this, is our Lone Mountain project. And you can see the lower plate area shaded in blue. This project has been owned by one family for 60 years and is underexplored. So these windows expose the elephant gold deposits in Nevada, and we have an exploration program planned for Lone Mountain later this year. So in a nutshell, the Austin Gold projects have had past exploration with initial results that are encouraging. We are at the exploration stage on this chart. Exploration with discovery is where you can get some of the biggest returns, and the rewards can be orders of magnitude. We believe that Austin Gold is where the star is on this chart. Very briefly, our share capital, we've already mentioned, we're listed on the NYSE American, symbol AUST. We have 13.25 million shares outstanding. Options and warrants of about 3.5 million gives us a fully diluted share capital of about 16.8 million shares, and over 50%, a little over 50% of the company is owned by directors and management. So before we drill, I can't tell you what is in the ground and whether Austin Gold will have a discovery on the projects that we are currently working. However, we are exploring for large gold deposits in areas known for hosting large gold deposits. The prize is potentially worth billions of dollars. When you have a lottery, when there's a lottery with $1 billion prize, there are a lot of people buying the tickets and only one potential winner. At Austin Gold, with a potential $1 billion prize, if we have a discovery, all our shareholders are potential winners. And you can't win the lottery if you don't have a ticket. So that's my presentation.
I mean, listen, if you might just make me go get a lottery ticket is all I want to say, right? I don't know when I don't know what the Powerball is. I don't know if it's Wednesdays. I know it's definitely Saturdays. I'm pretty sure, but I've got some follow-up questions. So just a couple before we go ahead and move on.
Sure.
When you went through your presentation, some of the things that kind of came to mind was, I know you talked about the potential in terms of gold, but I don't know if I heard anything in terms of how much gold has been discovered in Nevada.
Sure. So in Nevada so far, there's well over 300 million ounces that have been discovered. It is one of the richest gold districts in the world, and in fact has more gold per unit area than anywhere on the planet. Sure. So over 200 million ounces have been mined, about 300 million ounces probably discovered so far. So about another 100 million ounces in Nevada to be mined yet.
And then something else that came to mind was If you need financing, if you need, bigger players to come in the space as well, what are some examples of, say, exploration companies that have been bought out by larger companies after you discover something?
Sure. So back in 2011, Newmont, which is currently the largest gold mining company in the world, bought a company called Frontier Gold for $2.3 billion. More recently, the great company called Great Bear Resources was acquired by Kinross for $1.1 billion for their discovery in Ontario. So there's the majors are coming in and scooping up these discoveries when they're being made, partly because the major mining companies, of course, it's a depreciating asset. They open a mine and they start depleting their resource, so they have to replace that gold that they've mined. And so the easiest sometimes way for them to do that is to make acquisitions of some of these big discoveries being made.
And then we've only got about 60 seconds here. So final one for me, Bitcoin, gold, a conversation that's been happening for over a decade. What are your thoughts on the difference between the two?
Sure. So gold is a physical asset that is served as a basis for money for hundreds of years, perhaps thousands of years. Sure. Whereas Bitcoin is a recently developed cryptocurrency whose value is based on the perception of those who buy it and sell it.
I'm curious to see. We got to have a conversation where we might have a segment where we just kind of have the bulls for gold versus the bulls for Bitcoin. I'm sure there's some that just own both because, you want to go ahead and diversify yourself. But thank you so much. I appreciate you hopping on, Dennis.
I've got one final comment, if I may.
Sure.
Central banks right now are buying gold. They are not buying Bitcoin. That's telling you something.
And that's the mic drop, Dennis. We appreciate you for hanging out with us.
Okay. Thank you.
Absolutely. That was Dennis Higgs, who's the president of Austin Gold, NYSE. AUST is a ticker there. We're going to go ahead and move on to the final conversation that we've got set up here, and that's going to be with Brett Richards, who is the CEO and director at Gold Shore Resources. Ticker on the OTCQB is GSHRF. Brett, how's it going?
Great, Zunaid. Thanks for having me on.
Absolutely. I know you heard a little bit of the conversation that we just had with Dennis regarding gold, so I'm excited to have a different angle with you here. But before we get into all that, just give me a quick overview of what Gold Shore Resources does.
Yeah, we have the Moss Gold Project in northwestern Ontario, about 100 kilometers west of Thunder Bay. We have a 1.5 million ounce indicated resource at 1.23 grams at surface, and 5.2 million ounces of inferred resource at 1.1 grams also at surface. This is going to be an open pit operation one day, but significant size resource.
When we were talking during our prep call, part of the conversation was just the market and where it is. I'd love to kind of bring to light those conversations. So from your insights, from your opinion, why is the market where it currently is?
It's a great question that nobody can answer, but the reality is gold equities in the junior space are completely uncoupled from historical norms of trading. Inferred ounces in the ground typically trade at $20 to $30 an ounce historically, and indicated somewhere 40, 50, 60, and as you get up to proven probable, much, much higher. But we see gold companies today trading down. We're trading at $4 an ounce collectively between our two categories. And there's many other juniors trading at 10, 12, 14, $16 an ounce. And the reality is there's just no pools of capital moving into resources. And I'll caveat that and say yet, because I think we are going to have our day for gold. There will be I'll say the overarching geopolitical chaos that's going on globally. You have a U.S. election coming up in November, and kind of the macroeconomic outlook. You've got interest rates falling to a certain degree, and inflation being kind of a little bit stagnant. The return on bonds is going to be a lot less than the return on gold, and I think you're going to see pools of capital eventually look to natural resources.
I mean, we've been talking about inflation. I think the CPI number that just came out recently, that sent the market to the downside, I believe, is the initial reaction that we had. But you talked about, in terms of where the market is, fine. We understood your angle on it, and you're right. No one can truly answer there's so many different variables and factors that go into it. But then let's go ahead and talk about innovation and sustainability and what that looks like in the gold mining industry itself.
Yeah, for sure. I think when you talk about innovation and sustainability, I think it's something we have yet to see in a widespread way by juniors, maybe even developers. Now, the seniors and the senior producers are a little bit more advanced on it. But innovation is about technology advancement, and sustainability is about the fabric and psychology as to how we think as mining companies. So, for example, innovation, mining techniques are hundreds of years old, and how we execute them has not changed, it hasn't changed much over that period. You find it, you extract it, you crush it, you separate it, you liberate it, you smelt it, and how we deal with each of those areas has only ever changed, like small movements in efficiency, and yes, through innovation, but there have been no fractal leaps in technology. So, I just don't see where we have a scenario where you find it, dig it, and smelt it. You cut out some of these processes. We haven't found it yet, but we are seeing the use of AI and AI algorithm applications, and we're starting to see it for exploration companies. It increases the probability of discovery prior to putting a drill in the ground. And a good example of this is Cobalt Metals. I think people look them up. It's an extremely well-funded AI exploration company looking for kind of battery minerals. But mining is still the dig, blast, dig, haul, crush, grind, separate, maybe a regrind, separate again, electrowin. That's what innovation looks like.
So that's what innovation looks like from a grand scale of things. Let's kind of zoom in a little bit in terms of how Goldshore Resources is going to embrace the innovation and sustainability side, especially, let's be honest here, to create value for the shareholders. So one way I'd love to kind of get some insight on is I'm talking technologies, I'm talking practices, I'm talking strategies. What are you doing?
Yeah, so I'll work towards, what I think is also important at this stage of development. That's sustainability. And sustainability is a mindset. It's a cultural framework and a philosophy that goes right to the core values of the people who actually run the companies themselves. And right now, is the fabric of thinking. It's the fabric of actions. And mining has a reputation problem, and for good reason. We use slang, or the market uses slang like pump and dump, mine the market. We are perceived as an industry fraught with, let's say, corruption. And hey, we have a lot of black eyes over the past cycle to show for it that investors don't forget. So reputationally, we need to be different. So we need to build up our reputation for delivering risk-adjusted returns again. And that's why people come to the resources space. So when mining CEOs, approach things, they need to be doing the right thing at the right time with the right people and the right technology. You can't cut corners in our process. You can't communicate something is good when it's not. And we have to accept that not every project is the best in the world and may not ever see the light of day. And we approach it on a sustainability, whether we're talking to our stakeholders, whether we're talking to our partners, whether we're talking to our investors. There is a really big disconnect between our sector for a reason, because there's been a loss of trust. And we are taking an approach that we're trying to kind of rebuild that, doing the things that are going to be, I'll say, considered innovative. We do multi-element chemistry and oriented core. There are two programs that have borne significant results for us, but not everybody uses them. Are they advanced? Yes, they are advanced, and there are advanced geophysics as well. So there is innovation that makes us better. But I think it really starts to be the fabric of the people who are running these companies to, I'll say, improve and increase our reputation.
Now, you mentioned projects, so I'm going to go ahead and move on to this topic of conversation about the Goldshore Moss Gold Project, right? And to give some insight to the viewers at home, the mineral resource estimate last week was published showing about 1.54 million ounces at 1.23 grams, which indicates about a 5.2 million infrared at 1.11 grams. Now, that's a lot that you understand. The viewers and I myself may not. So tell us exactly how rich is this project with the publication that came out?
Yeah, Goldshore has been awarded an extremely large endowment. We actually have a path where we can show through historical drilling and historical mineralization, we can show a path to 12, 15 million ounces. And that's going to get the attention of a lot of people. So as far as quantity goes, I think we tick that box, first quartile of our sector in North America. As far as grade goes, we're north of 1.1 grams at inferred, 1.2 grams indicated. That is probably top quartile as far as grade goes, where we see projects like Detour Lake and Cote Lake and New Gold's project, Equinox Greenstone. These are all sub 1 gram deposits. Now they're big, large capex, big volume movement projects. And we see an opportunity where maybe we can selectively mine, isolate high grade, do a smaller scale project that has a lower capex in order to get this into production in as short a period of time as possible. So what we have at Moss Gold is extremely special, and it's extremely large.
And then last question for me is in terms of your peers, with the resource numbers that came out, with everything that you've talked about here previously on this conversation, how does Goldshore's valuation stack up against your peers, your competitors?
Well, I wish I had better news, but we're trading at about $3.50 an ounce today, which is probably the bottom of the group. And we have peers trading at 10, 12. We have peers trading at 20, 25, and $30 an ounce. Yeah. So you can just imagine the potential upside when this market recouples to historical norms, when this market and pools of capital start to come into resources. What are they going to look for? They're going to look for discoveries that are big, that have potential, that are actually going to go into production, and that are valued very low today. And we tick every one of those boxes. You can see quite easily a re-rate where we would get 3-4 times money to our shareholders on just a simple re-rate, not looking at the actual potential at the end of the day. So I think there's significant upside for investors in Goldshore.
Well, hey, I appreciate the insights, but before I let you go, I got to give you the floor in case there's anything else you want to talk about that I may have missed.
So, Nate, I think we're in a very, very interesting time here. In my 35 years of doing this, I've never seen the perfect storm for a commodity like gold. And I think we're approaching that on a number of factors. Geopolitically, macroeconomically, the actual weakening of the US dollar heading into a very chaotic US election. People are going to look for safety. They are going to look for, where am I going to get yield? Where am I going to get return? They're going to look to gold. They're going to look to gold equities. And I think we are going to have our day. It's not a matter of if, it's a matter of when. And, I've said this before, patience is a virtue I'm getting really tired of having, but we will get there.
Hey, I hear you. And I look forward to when that time comes for you to hit my line, and we'll hop on to have some more great conversations. Thank you so much for your time.
Absolutely, Sinead. Thanks for your time.
Absolutely. That is Brett Richards, who is the CEO and director of Goldshore Resources. Ticker on the OTCQB is GSHRF. And that about wraps it up for us. We told you we talk gold, we talk minerals, we talk lithium. And that's exactly what we did, because we wanted to go ahead and get a little bit of mining unearthed. As you can see, wanted to navigate the ore of innovation. And we appreciate you for joining the conversation. I know you get to see my face be on camera, but I got to give props to Aaron, Charlotte, Zoltan, Emily, Chad, and Drew, who work hard behind the scenes to make these conversations possible. So on behalf of all of us, we wish you a good day and happy investing. We'll see you next time.